In all honesty, they're a great thing. There should be more of them. Everybody agrees about that. There should be more credits. Hi guys, welcome back to LGT Services YouTube channel. Today we are going to talk about credits. Credits really are a good thing. Like, in all honesty, they're a great thing. There should be more of them. Everybody agrees about that. There should be more credits. Actually, there should be more deductions, but I digress. Okay, so today we're going to talk about credits. So let's get into it. Don't forget, hit those buttons, like and subscribe. Alright, so let's give you a little bit of a refresher if you haven't watched any of my previous videos. So credits are taken from your tax liability, while deductions are taken from your taxable income. So you first have your AGI, then they figure out your taxable income, and so a deduction will be taken before that. So your taxable income will be reduced based on the deduction. Then after you have your taxable income, they compute your tax liability, and from your tax liability is how much you owe. And then from there, from your tax liability, you add your credits, which means really subtract the amount that you owe based on your credits. So there are two different types of credits. There's non-refundable credits and refundable credits. So non-refundable credits means that you only get a refund up into the amount that you owe. So if my tax liability is $220 and I got a credit for $300, I will only get to apply the $220 because that's what I owe of my $300 credit. And the other $80 is a gift. A refundable credit means you possibly could get the full amount of the credit. So let's go back to the example where my tax liability is $220. I have a credit for $300. It is a refundable credit of $300, and so I wipe out my $220 of tax liability and I get $80 refunded to me. So some credits you will see are non-refundable and refundable. Most credits are actually either or, but the ones that are both, like the child tax credit, there's different limitations and requirements to get that refundable part. So, you know. Today we're not going to talk about all the credits that exist. Today we're going to talk about the family and dependent credits. These are credits for just for having a family and taking care of a family. The IRS wants to give some money back to those family units as a way to encourage family, I guess. There are 5 family and dependent credits, and today we'll talk about all 5. The first is the earned income credit. So this credit has many restrictions. I'm just gonna say right up front, this credit is to help low income taxpayers and their families. So, as I've said in my previous videos, married filing separate is the worst status that any person can have, and they should figure out any type of way to get out of that status. For example, with the EITC, the Earned Income Tax Credit, you are not eligible for this credit if you're filing married filing separate. So there are some restrictions for this tax credit, as there are with all of them. Let's go over the restrictions. So investment income needs to be less than $3,600. Investment includes passive income, stocks, bonds, etc. Then also you cannot file for foreign earned income or the foreign earned income exclusion. Really, the foreign earned income is simply you're making money outside of the United States, and even if you live outside of the United States, you must pay taxes in the United States as an American citizen. We pay for our rights to be American. And so you're earning outside, you would want to, if you're earning outside of the United States, you would want to use that money to counter out the amount of taxes you have to pay in the United States. And voila, that's where we get the foreign earned income tax, or the foreign earned income exclusion, whichever one you may take. Then also, of course, you need to have earned at least $1, as the name of the credit is earned income. So you need to have earned at least $1. That does not include passive income or stocks or bonds. So the income or AGI limitations for the earned income tax credit is quite specific, and it varies depending on how many qualifying children you have and also your filing status. For example, if you're single without kids, your maximum AGI needs to be $15,820. And then it goes all the way up to 3 children or more, but the 3 or more is the same. Let's talk about the amount of credit that you can receive, the maximum amount of credit. Obviously, this depends on, your filing status and how many kids you have, but I'm just going to go into the maximums. So if you had 3 kids or more, again, as I said, 3, 4, 5, 6, it's all the same for this particular credit. The maximum amount for this credit is $6,660. It's $5,920 for 2 qualifying children. 3 qualifying children, it's $3,584. And for no qualifying children, the maximum amount of this credit is $538. Really, the earned income tax credit is to help those with kids. That's those that benefit the most from this credit. Okay, let's talk about our second credit, which is the Child and Dependent Care Credit. This credit is to help with the expenses for caring for your child or a dependent. You need to meet a couple of qualifications before you're allowed to claim this credit. We call those qualifications tests. Can you meet some tests? So the first test is the qualifying person. The person that is receiving the care needs to be either your qualifying child and under the age of 13, a parent or spouse or a dependent that is physically or mentally unable to care for themselves. So the next test for the Child and Dependent Care Credit is the earned income credit. You need to have earned income. This credit is a dollar for dollar credit for the amount that you've earned. It is a non-refundable credit, meaning that even if your credit is higher than your tax liability, you will not get any refund from it. The next test is the work-related test. The child and dependent care needs to be for work-related reasons. It's either you are using the care while you're looking for a job or while you are working. Some people don't know the part about looking for a job. That's totally fine too. The next test is the joint return test. This just means if you're single, if you're head of household, then obviously you can use this credit. However, if you are married filing jointly, your spouse needs to be married filing joint as well. And then of course, if you're married filing separate, you cannot use this credit. Okay, so the next test is the provider identification test, and this is the part where some people have a few issues. The provider identification test is for those that are actually providing the care. You need their name, their address, and their tax identification number. If it's an individual person, it can be their social security number. If it is a business, it's their EIN number. The amount that you claim that you spent on this expense for the care needs to match with the amount that they report, because the IRS does cross-check. So the things that are not included for expenses for this child independent care credit are food, lodging, clothing, education, entertainment, and child support. Literally, the expense that they're only counting is the expense of care. So if you pay your neighbor, if you put your kid in daycare, those expenses. So let's talk about the amount of this credit. So as I said, this credit is a non-refundable credit. The first qualifying person, the maximum is $3,000. The second qualifying person is another $3,000. For two qualifying people, it is a total of $6,000, and any other person, it doesn't matter. The max they go up to is two qualifying people. Again, this credit is a match dollar to dollar with your earned income. So if you or your spouse earns less than the amount of the credit, let's say your spouse earns $2,000 and you have one qualifying child and then you put them in daycare, and so you got their $3,000 worth of credit, you're not able to take that full $3,000 regardless of the amount of your tax liability, because one of your earned incomes is $2,000. So the least or the lowest amount of earned income is the maximum amount of a credit. Also, again, there is a dollar limit on the credit. Okay, let's talk about our third credit. It is the adoption credit. This credit is not one of the most common credits, so I'm going to kind of go a little quick with this credit. This credit is a maximum of $14,300. This credit is for all the adoption fees, lawyers, service fees, filing fees, all of these types of fees. It doesn't include food, it doesn't include clothing, it doesn't include airfare, but all of these types of fees. There's a wonderful interactive worksheet that you can use on the IRS website to help to see if you can qualify for this credit. Please keep in mind the adoption needs to be finalized in the year that you claim the credit. Oh, and lastly, this credit is not refundable. Okay, let's talk about one of our refundable, non-refundable credits. This is the child tax credit and the other dependents credit, or credit for other dependents, I think is how they work. So this is a $2,000 credit for each qualifying child. If you have questions whether it's a qualifying child or a qualifying relative, I suggest that you go back to my other videos of tax terms and you can see about the different tests to see if they're a qualifying child or a qualifying relative. If it's a qualifying relative, then there is a $500 non-refundable tax credit. So qualifying child has a $2,000 non-refundable tax credit. However, the qualifying child also has a $1,400 refundable tax credit. So the $1,400 is taken first out of the $2,000. I know this is complicated. Let me give you an example to help it make a little bit more sense to you. Okay, so let's say that I have one qualifying child, so I'll get $2,000 worth of the credit, and my tax liability is $1,300. So the first $1,400 is refundable from that credit, so that $1,400 will be used to eliminate my $1,300 tax liability, and then I will receive a $100 refund. The other $600 is a gift. But now let's imagine my tax liability is $1,400. If my tax liability is $1,400, I have one qualifying child, the credit will just wipe out my tax liability, so I won't owe any taxes, but I will not receive a refund. If I owe $1,800, my tax liability is $1,800, I get the $2,000 credit. The $2,000 credit can wipe out my tax liability and no refund. So our final tax credit that we're going to talk about is the credit for the elderly and disabled. This credit applies to anybody that's 65 years and older or permanently disabled. So there are three parts to this credit. The first part is of the age and or being permanently disabled. And then the second part is the financial part. Before we get into the financial part, let me tell you the amount of this credit. The credit for the elderly and disabled can range anywhere from $3,750 to $7,500. So this credit is quite nice if you can qualify. The other two parts of this credit, the financial parts, are the more difficult parts for people to qualify for. So let's get into it. It's a little specific and it greatly varies on your filing status. So if you are filing single, your adjusted gross income cannot be higher than $17,500. That is the second part. The third part is that your Social Security, your non-taxable Social Security or pension or other benefits cannot be higher than $5,000. So if my Social Security benefits are non-taxable and they are $5,001, I will not qualify even though my adjusted gross income is less than $17,500 and I'm of the age of 66, for example. So you need to meet all three parts to qualify for that. If you're married, filing joint, and one person qualifies, the adjusted gross income, the AGI, needs to be no higher than $20,000, and the non-taxable Social Security or pension benefits needs to be less than $5,000. If you're married, filing joint, and both of you want to qualify, the AGI needs to be less than $25,000, and the non-taxable Social Security or other pension benefits needs to be less than $7,500. If you are married filing separately and you actually live apart from your spouse, your AGI needs to be less than $12,500, and your non-taxable Social Security or pension needs to be less than $3,750. So that is all 5 of the family independent credits that the federal government offers. We went over the earned income credit, the child and dependent care credit, the adoption credit, the child tax credit or credit for other dependents, and then of course the credit for elderly and disabled. All these credits are non-refundable, so they will max out at your tax liability, except for the child tax credit. The child tax credit maxes out at $1,400. That first $1,400 is the only part that is refundable. Again, this is the child tax credit, not the credit for other dependents. In our next video, we are going to talk about income and savings credits. Again, we'll talk about the earned income credit, the savers credit. There are some other credits that are in there. Please don't forget to like and subscribe. I hope this video was helpful. If you have any questions, please feel free to reach out to us at www.lgtservices.com. My name is Nicole, and I hope you guys have a wonderful day.